Hello there, Hector Deville here. In this video we are going to be talking about one of the two specific type of setups or I personally like to try it whenever we are looking for 3 SMA trading opportunities. Alright, we have a number of concepts to talk about over the following minutes as far as, again, swing setups. We are going to be talking about confluences of support and resistance. We are going to be talking about the retracement trend lines. We are going to be talking about the actual pattern we are going to use in order to enter the market, okay, in order to trigger our trade, which is the breakout pullback continuation price pattern, okay. And finally, obviously, we have to talk about targets and stop losses, okay, basically where we are going to be exiting the trade either in profits or at a loss. Hopefully, more often than not, it should be for a profit. Alright, but at any rate, like I said, we have a few different concepts we're going to be reviewing over the following minutes, and then we'll be moving on to actual real Forex charts, so you see how it all looks like on, like I say, on real trading scenarios. Alright, okay, let's get going. Well, okay then, let's start off with confluences of support and resistance. Since I've pictured an uptrend here, obviously we'll be talking about confluences of support. In case we have a downtrend, we'll be talking about confluences of resistance. Okay, what's a confluence? Well, a confluence is basically an area in your chart where multiple different elements of support or resistance come together within few pips of each other. Alright, different elements of support and resistance that line up more or less at the same junction of the chart, strengthening each other. Okay, I personally like to pay special attention to 4 different elements of support and resistance. That's trend lines, counter trend lines, Fibonacci retracement, and previous swing highs or lows. Alright, don't you worry, we are going to explain them all in detail. Okay. Now, so far, throughout the last few videos, we've established that we want to search for bounces of the dynamic area of support and resistance, okay, in order to, well, hopefully write price for a whole new swing in the direction of the trend, right? Now we are implementing a whole new element. Again, take confluences. The idea here is that any of these elements, if we find any of those elements around the dynamic area of support and resistance, that's going to increase the possibility of a bounce, because now we not only have the moving averages, the dynamic area of support and resistance, but we also have some standard elements of support and resistance strengthening that signal, or rather strengthening the possibility of a bounce. So let's imagine that's a current market price there, okay, that's current price ticking in real time at this moment, and we've already determined that we are in an uptrend, right? Obviously we want to search for long opportunities to buy into this uptrend. Okay, as we've already established over and over, we want to buy from the dynamic area of support and resistance, and that means that we need to wait for a little bit of a pullback for price to come back down here, and from there to search for our long opportunities, right? Well, now, as I was mentioning before, we are going to implement a whole new element into the equation. Standard elements of support and resistance in order to trigger our trades at the most optimal bounce point. The idea here is to draw those different elements of support and resistance, find which of them come along the dynamic area of support and resistance, and that's going to be our optimal entry point. Alright? Okay, trend lines. You draw trend lines in an uptrend by linking the different swing lows within that trend. Alright? Obviously, if we were downtrending, you would draw your trend lines by linking the different swing highs. Alright, linking swing highs, you have one trend line there, then you can draw this one there. Sometimes you will find that all the different swing lows do come in line, do come together, and therefore you can indeed link them up in one single line. Sometimes you'll find that, the swings are not perfectly harmonic, and maybe this one may be a little bit longer, okay, that final swing, and therefore, well, you would have one trend line there you would have another, oops, sorry about that, linking these two swings there, you have another trend line there. Then you can also link this trend line there, all right, and therefore you have a third trend line. So linking different swings, you can obviously come up with different trend lines, right? Again, the ideal situation is that they all more or less come together in one single line. That's not always going to be the case. At any rate, you mark those trend lines that whenever you actually project them into the future, they come in line within or around the dynamic area of support and resistance. So if I have a trend line coming somewhere around there, by the time price retraces back down, that trend line comes somewhere in there, okay? And obviously, in order to reach that trend line, we would have to, well, break the dynamic area of support and resistance, touch the 100, etc., etc., and therefore I am not going to be interested in that trend line at all, okay? I only want to draw those trend lines that whenever I project them into the future, they come around the dynamic area of support and resistance by the time price retraces down. Alright, we are now looking into the sterling pound against the American dollar, 30 minutes time frame. As we can see, it's certainly a downtrending scenario with those moving averages pointing down parallel to each other, etc., etc. We can obviously draw different trend lines within this trend. I'm gonna mark the two most obvious trend lines. We have one there, okay, linking the beginning of the trend with that swing high, okay. However, as we can see, by the time price retraces up to, well, retest that trend line, we would have by then broken, first of all, the dynamic area of support and resistance, second, the trend line, the 100 moving average, and also we would have broken the swinging pattern, because if price is to retrace all the way up there, we would have taken the previous swing high, okay. Remember that in a downtrend you want to score lower swing highs, lower swing low, lower swing high, lower swing low. Remember, harmonic swinging patterns, all right. So this is certainly not the trend line we want to take any trading decisions. We don't want to base any trading decisions off that trend line, because it's just not at the ideal location. So that's a trend line I'm going just to delete. Okay. Also, we can draw this inner trend line here, right? Linking that swing high there and this one there. Okay, now we can see how this one does indeed fall in line within the dynamic area of support and resistance by the time price retraces up to the to the dynamic area of support and resistance. So that's a good thing. Okay, you want to draw or to mark those trend lines that do fall within the dynamic area of support and resistance as price pulls back. Okay, so this is the trend line that I want to keep on my chart as far as searching for confluences of support and resistance, in order to, well, hopefully begin searching for bounces to the downside of those confluences around the dynamic area of support and resistance. And again, like I say, hopefully I will be using those confluences for a whole new swing to the downside. All right. Well, next one up, counter trend lines. Well, if we've defined trend lines as, straight lines linking the different swing lows in an uptrend or swing highs in a downtrend, all right? Well, a counter trend line is exactly the opposite. Is trend lines that link in an uptrend the different swing highs. Okay, not the swing lows, guys, but the swing highs. Let me give you an example. This one, for example, let's imagine this is price action and price begins to trend up from this moment on. Well, do you see how we can link these two swing highs? All right, with these two swing highs, we have first of all this trend line, okay, standard trend line linking the swing lows in an uptrend, and now we also have that trend line coming there, linking the swing highs. So if price comes back down to retest that area, the dynamic area of support and resistance, we have this again, this counter trend line falling in line somewhere in there. All right, so basically this is the concept. You've probably heard this before. The concept of former resistance, once broken, may work as support once again. Okay, price comes back down to retest that former resistance line. Now that's broken, it may work as support, and price may bounce to the upside of that counter trend line, just as it may do of a trend line. Okay, so in this case we would have a confluence of this trend line and that counter trend line coming around that area. Do you see that, how they both fall in line more or less in there? So if price retraces back down, okay, obviously assuming that confluence is within the dynamic area of support and resistance, that would be a very strong area to search for bounces. Any bounce, okay, any price bounce that may happen of that area is going to be a strong bounce, because we have not only the dynamic area of support and resistance, but also those two standard levels of support coming in line, coming together, and therefore strengthening the signal. Okay, so that's the idea here, guys. The more elements we have in our favor supporting the bounce in our desired direction, the higher the quality of the trading signals we'll get as a result. Okay, we are back at our sterling pound against the American dollar 30 minutes time frame example. Okay, this is the trend line we drew a couple of minutes before. Now, if I actually zoom out, you will notice how we have two swing lows here. Okay, we can link them up with an actually let me do it with a straight line. With a straight line. I'm gonna mark that in red, all right? And that's a counter trend line, just because in this downtrend, okay, we are now, the trend line was formed by linking swing highs within the trend. Okay, well, now we are linking swing lows, okay, two swing lows, giving us a technical line of former support, now broken. Who knows, maybe whenever price comes to retest that level, let me actually now zoom in again. Whenever price comes to retest that level, that line may work as resistance, and therefore price may bounce to the downside. Now, as you can see, those two lines don't come together, all right? They don't come together. In order to come together at that area, the dynamic area of support and resistance, this line should come somewhere around there. Okay, that would be a very powerful trend line. A very powerful confluence. Okay, the dynamic area of support and resistance, the trend line, the counter trend line, etc., etc. This time around, it's not an example, a valid example, because they don't come together. Okay, we have, this is current market price, the trend line is somewhere in there, whereas the counter trend line is somewhere up there, and at any rate, it's above. Okay, it's beyond the limits of the dynamic area of support and resistance. So that's not a valid confluence as per the counter trend line. But at any rate, guys, I just wanted to show you with a visual example, okay, with an actual example, what a counter trend line is. All right. Many people don't quite look for those counter trend lines. They just focus on actual standard trend lines, and believe me, counter trend lines are just as powerful as standard trend lines themselves. Okay, so you want to search for those counter trend lines, especially if they come around the dynamic area of support and resistance. Very powerful stuff, guys. Okay, next one up, Fibonacci retracements. Now, explaining what Fibonacci is, or Fibonacci retracements are, is way beyond the scope of this video presentation. I could record a whole video on Fibonacci retracements. I will assume that you guys know what Fibonacci retracements are. If you don't, there is a fantastic article, the link to a fantastic article right under this video. Like I say, if you want to, get familiar with Fibonacci retracements, that's something you certainly want to read. Alright, at any rate, Fibonacci retracements are optimal retracement levels where price may retrace down to as per one specific mathematical formula, which is obviously the Fibonacci ratio. Again, I'm not going to explain that, but just for you to, just so we are all in the same page, I will just say that they are ideal retracement points. Okay, the way you calculate Fibonacci retracements is simply by measuring the distance from the lowest point of the swing, the beginning of the swing, to the very end of the swing. Actually, let's use this swing, for this explanation. We take the very beginning of the swing to the highest point of the swing, all right? And our Fibonacci tool will give us the different potential retracement levels. There are 5 potential retracement levels as per the Fibonacci ratio. We have the 23% retracement, the 38, the 50, the 61, and the 76% retracement. Okay, for example, the 76% retracement means that the distance from the highest point all the way up here is 76% of the distance from the beginning of the swing to the end of the swing. Okay, basically it tracks how far price has retraced back to the beginning of the very swing. All right. Now, I personally only look or only pay attention to the 38, 50, and 61 Fibonacci retracements. I don't care for the 23 nor for the 76. Okay, I like to see my retracements to fall in line somewhere between the 38 and the 61% Fibonacci retracement. Now, that doesn't mean that I require my retracement to touch right to the pip either the 38, the 50, or the 61% retracement. As long as price falls within any of the, in between the 38 or the 61, it's okay by me. So I rather treat Fibonacci's as a Fibonacci retracement area rather than a Fibonacci retracement or a series or different Fibonacci retracement levels. I like to treat it as a whole area, again between the 38 and the 61. So I would mark the beginning of the swing, the end of the swing, then I would mark the 38, 50, and 61% Fibonacci area, and I want that area to be somewhere around the dynamic area of support and resistance, by the time price retraces down there. Okay, so I want to see my Fibonacci retracement levels giving me, or coming in agreement, so to speak, with the dynamic area of support and resistance. Okay, let's take a look into another current example. That's again current market price on the American dollar against the Swiss franc, 4 hours time frame. As usual, what we need to do, if we want to draw Fibonacci retracements, is to define the swing in itself, or rather, the beginning of the swing and the end of the swing. Obviously, of the latest swing. Right? Well, this is the latest swing to the upside, right? This is the beginning of the swing, and so far, this is the end of the swing. If we were to draw the Fibonacci retracements of the previous swing, well, that's obviously the beginning of the swing, and that's the end of the previous swing, right? So we would pick our Fibonacci tool, which, by the way, comes standard with any charting platform, right? And we would draw the Fibonacci retracements from the beginning of the swing all the way to the end. And as you can see, the Fibonacci tool draws automatically the 38, the 50, and the 61% Fibonacci retracements. This time around, price touches right to the pip the 61% Fibonacci retracement. That's great. Again, I don't quite require that mean perfect bounces of a Fibonacci retracement. As long as the bounces happen somewhere in between the 38 and the 61% band, it's okay by me. But anyway, that's in the past. What we now want to draw is the potential Fibonacci levels as per the latest swing, and that's what we are going to be doing right now. All right, there we are. So beginning of the swing, the end of the swing so far. Obviously, if price was now to keep on pushing up, we would simply need to readjust the Fibonacci retracement. Okay, that goes without saying. You want to keep your Fibonacci retracements up to date. However, let's assume that this is indeed the end of the swing. That's where price has stopped out, and well, we will see price retracing back down from this swing high point. All right, so we can see how the 38 Fibonacci retracement and the 61 Fibonacci retracement level more or less come in line, okay, with the dynamic area of support and resistance. Please mind that this is the dynamic area of support and resistance. By the time price, whoops, sorry about that, by the time price retraces back down, the moving averages will be somewhere in there, and therefore, you know, they fall in line within the 38, and the dynamic area of support and resistance, sorry, falls in line somewhere in between the 38 and the 61% Fibonacci retracement. So that's a good sign. Okay, again, you want to see the moving averages, okay, the 30, the 50 moving average, the dynamic area of support and resistance at any rate falling in line somewhere in between these two, that Fibonacci retracement area. Alright, so as long as that happens, it's usually a good indication that we are seeing harmonic bounces, such as in here, okay? Such as in here. Let me bring back the Fibonacci retracement tool to measure the previous swing, okay, from the beginning to the end. As you can see, the dynamic area of support and resistance at this moment was in between the 38 and the 61%, so that's again a good thing. It usually indicates that we are seeing rather harmonic bounces, okay? And as already mentioned on previous parts of the video, on previous videos on this module, that's usually a good indication, okay? And finally, the previous swing high or low, okay? Swing high if we are in an uptrend, or swing low if we are in a downtrend. Now, the idea is to it's a pretty similar concept as what we've seen before as per the counter trend lines. Okay, is the idea of former resistance. Once broken, price may now retest it from above and find support of that level. So a whole new swing can take off from that specific level. All right. You want to mark only the previous swing high, all right? The previous swing high there, meaning that you wouldn't really go drawing this one, okay? And waiting for price to retrace all the way back down there, okay? Searching for bounces off that area. Again, only the previous swing high. Obviously, this is the previous swing, and that's the previous swing high. So for the new swing, you would mark a horizontal line. I repeat, a horizontal line of the previous swing high, and if it comes in line somewhere around the dynamic area of support and resistance, again, that's a good sign. That usually is a good indication that the swings are rather harmonic, okay? And again, that's usually a good indication that the trend is moving in a rather healthy pattern, all right? So draw horizontal lines of the previous swing high. Again, in the case of an uptrend, of a downtrend, you would draw a horizontal line of the previous swing low, and then wait for pullbacks. Okay, wait for pullbacks to see if we can get a bounce of that previous swing high. That's the ideal situation. Okay, just as we search for bounces of trend lines, okay, on off a Fibonacci retracement, 38, 50, 61 Fibonacci, well, we also look to get bounces of the previous swing high and low. And obviously, the more of those different elements of individual elements of support and resistance, the more of them that come together around the dynamic area of support and resistance, the stronger the confluence will be. And therefore, any bounce we may get off that level, well, the higher the chances that that's going to be the very beginning of a whole new swing, and therefore the higher the chances that we'll be able to squeeze some nice profits out of that level. Out of that next upcoming move. Okay. Okay, here we are back at our former example. Let me actually take off the Fibonacci retracements. Just a second. I'll try to delete that off my chart. There we are. So this is the current swing. This is obviously the previous swing. Okay, and therefore I am to mark the previous swing high, extend that, or actually project a horizontal line of the swing high. Okay, and basically the idea is that by the time price comes back down, the moving averages should have caught up with that level, and therefore you want to see the dynamic area coming in line with the previous swing high by the time the retracement has taken place, and therefore you want to see, or ideally you would see, a bounce of this area, again, of the dynamic area of support and resistance, of the previous swing high. Okay, remember that we also had the Fibonacci retracements somewhere in this area as well, so that would be a nice confluence of different elements of support, and therefore any bounce we may get of that area would probably give out a very nice, a very profitable buy opportunity there. Okay, let me now show you another example. This time around, a downtrend. We've already seen this chart before. It's the sterling pound against the American dollar, 30 minutes time frame. This is obviously the latest swing. Now we are going through the pullback aspect of this swing, and of course we are to mark the previous swing's low. The low point, the previous swing's low, since we are in a downtrend. Okay, we are not marking the swing high now, guys. We are now in a downtrend, therefore we are only interested in the previous swing's low. Now we have two swings low here, that one and that one, right? This one being a little bit lower than this one. Since this is the lowest point for the previous swing, this is the one where, this is the one we are going to be basing our horizontal line around. Now, we can see how that horizontal line is just above the dynamic area of support and resistance. That means that if price is to retest that horizontal line, it should breach the dynamic area of support and resistance. Now that's all right as long as the breakout is something like this. Okay, just a temporary breakout, price stabbing or breaching through the dynamic area of support and resistance very briefly so. Okay, so if we see that price breaks above, slaps the previous swing low, and immediately after it turns around, that's still okay. However, if we see that price gives us multiple bar closes above the dynamic area and above that line, then this whole trend is, at least is weakening down, and well, we will not be searching for short opportunities any longer. All right. So even though this level is just above the dynamic area of support and resistance, that's still okay. All right. Well, okay, now we've already gone through all four different elements of support and resistance we are going to use in order to search for confluences around the dynamic area. Now, obviously, the markets are not perfect. We cannot always expect all four to come in line. Okay, that would be, well, asking for way too much, I'm afraid. The markets are usually not that nice. But as long as you can get one or two, all right, one or two around the dynamic area is usually good enough to search for our trading opportunities as we begin seeing, or as we begin getting that bounce of the dynamic area. Again, if we have one or two out of these four different elements around the dynamic area, as price begins to turn around and begins to take off for what it may happen to be a whole new swing in the direction of the trend. Again, as long as you have one or two of those different elements, you have the green lights to trigger or to search for any buy opportunity as the bounce begins to take place. Okay? Again, the more the merrier, but as long as you have one or two around the dynamic area of support and resistance, and as long as you do get that bounce, that's still good enough to to trigger your entries. All right, now I'll tell you what. I'm gonna go through some actual examples, some actual trading opportunities myself, and I'm going to be drawing my own confluences of support and resistance. Just so next time you you sit at your trading station, you know how to do it yourself. Okay, so I'm gonna present some real charts, and I'm gonna be drawing my trend lines, my Fibonacci's, my counter trend lines, etc., etc. Again, just so you know how to do it next time you do it, or you have to do it by yourself. All right. Okay, we are looking into the sterling pound against the Canadian dollar, weekly time frame. Nice downtrend, isn't it? Also, the trend filter indicator is calling a downtrend on the weekly, okay, which is exactly this time frame. So, certainly we are looking into a downtrending price action. Let's draw some trend lines here. We have two clear swing points, swing highs there, okay? So we can link them up in a straight line, all right? There it goes. Well, this trend line is a little bit far too high for my taste. Okay, please mind that the dynamic area of support and resistance is down here, and this trend line goes somewhere in between the 50 and the 100, a little bit too far up high for my taste. Let me zoom out, see if I can find another trend line. We have another clear swing high there, and this one. So I am going to mark that one. Let's see where that trend line goes. Wow, way too high. Okay, it even goes beyond the projection of the 100 simple moving average. I'm not interested in that one. Okay, so I can easily delete it, and that's about it. Those are the two most obvious swing points, swing highs in this trend. So that's the only trend line I can keep. Let me zoom in once again. Now, what about counter trend lines? As you know, in a downtrend, counter trend lines, we form counter trend lines by linking swing lows. So those are the two most obvious swing lows there. So we can link them up. Let's do that just in a second. There we are. Oh, well, as you can see, price already reacted off a counter trend line. Okay, do you see how counter trend lines are just as profitable or just as powerful as trend lines themselves? Okay, do you see how we got a valid move up on a bounce of a counter trend line? However, this bounce didn't quite happen anywhere within the dynamic area, so that's not a trading opportunity I would feel comfortable taking. Okay, it was indeed a profitable trading opportunity, but just too far away from the optimal area. Okay, and therefore I wouldn't have felt comfortable taking that trade or that bounce there. All right, so that's not a bounce I would be interested in taking. Let me actually zoom out, see if I can find no, nowhere near, no other two counter trend lines. This one is certainly broken already. So yeah, only that one there. So no counter trend line that I can use on this specific chart. Okay, now what about Fibonacci retracements? Well, we have one swing here, we have another swing here, and we have the latest swing there. So this is the high for the swing, that's the low for the swing. I am to take my Fibonacci retracement tool and link those two swing points. If this is indeed the lowest point of this swing, we can see how the dynamic area of support and resistance as we project the moving averages falls in line, okay, within the 38 and the 61% Fibonacci retracement. So that's a good sign. Okay, that's a good sign. Obviously, if price doesn't quite retrace from this point on, meaning that this is indeed not the low point for this swing and we find that price keeps on pushing down, I will simply need to keep on readjusting my my Fibonacci's until we do indeed find the low for this swing and price begins to retrace up. As it stands right now, well, so far so good as far as the Fibonacci's. Okay, the moving averages by the time we get a pullback should be in between the 38 and the 61 Fibonacci retracement, so that's a good thing. I am liking that. Okay, now finally, what about swing lows, swing highs or swing lows? Obviously swing lows, since we are in a downtrend. Well, we are to take the lowest point of the previous swing. This is the previous swing, right? This is the current swing. This is the previous swing, right? So we are to take the low for that previous swing, and we are to extend a horizontal line of that level. There it goes. Gonna mark this one. I don't know, what's your favorite color, guys? Let's say green, for example. All right, there we are. So green color there, and well, we can also see how, as we project the moving averages, also this previous swing low, or rather the extension of that previous swing low, is falling in line with the Fibonacci retracements and the dynamic area of support and resistance. So, moral of the story, around this level 162 below, somewhere in there. Actually, let me give you the exact level. 162.40, 162.30. Around this, whoops, let me just click on around this area, right? Again, 162, 162, 40, 50, somewhere in there is a good area to search for potential bounces to the downside. Okay, this is a fantastic area. We have multiple elements, not the trend line. The trend line, unfortunately, is nowhere near that area. Okay, please mind that the trend line is way too far above this area. So I'm just going to delete the trend line. We have the previous swing low, we have the Fibonacci retracements, and the moving averages. So again, around 162, 162.50, I know that we can find some potential short opportunities should price, first of all, retrace up to that area, and second, should price bounce down of that area. So if we see that price is bouncing or begins to bounce down of that area, we should be all over this chart, all over this trading setup, searching for short opportunities, because chances are a whole new swing should be taking off that level, should be taking off from this level, such as in here and in here and in here, etc., etc. You know, whole new swing down, a whole new swing down. Well, why not yet another swing down? This is the optimal area for that to happen, and that's where we are going to be waiting for price to to come up to that level. What do I usually do? I usually place a sound alarm somewhere in there, okay? So I don't have to physically be monitoring this chart 24/7. I just simply place a sound alarm there. I crank up my my speaker's volume, and I can simply walk away from my trading computer, okay? Or I can check my emails, whatever. Okay, as soon as the sound alarm goes off, I know that I am to pay attention into this chart, and again begin searching for those bounces in order to trigger my entries. All right, but again, as far as this video goes, please mind how we've gone through elaborating a confluence, or by marking the confluence of different elements of support and resistance, we now know what's the optimal area to sell into this downtrend on the sterling pound against the Canadian dollar. All right, another example, the euro against the Swiss franc daily time frame. Another nice downtrend. The trend filter indicator also calling a downtrend. So I mean, we can just take a quick look into the moving averages, and we know that everything is looking good for a downtrend, right? So do we have any confluence in here? Well, I have no idea. Let's check it out, shall we? As usual, I like to begin with my trend lines. Let's draw some trend lines in here. I don't like the green color. Let me just color it in blue, for example. So, oh, actually we have a beautiful trend line there. You see how we can more or less link this line, this bounce point there, another, whoops, this bounce point there, another one there, and another one there, and another one there. So beautiful trend line within this trend, okay? And obviously coming together all along the dynamic area of support and resistance. So yes, that's a valid trend line I want to keep in my chart. All right, what's next? Counter trend lines. Well, we have a swing low there and another swing low there, but obviously, well, that's not a counter trend line I can rely on because it's already broken. And anyway, price, by the time it comes up to retest the counter trend line, price should be already breaching through the 100. So that's not a counter trend line I can use. There is another counter trend line there, but again, price is above that counter trend line, so it's impossible for price to retest that counter trend line should it retrace up. Okay, so this counter trend line is not valid either on this scenario, or at least I cannot use it in any way. Let me zoom out. Well, that counter trend line is far gone. We have another counter trend line there. Do you see that? How we have that counter trend line there? But I usually don't like zooming out that much, even though this is a valid counter trend line indeed. Okay, and it seems like price could bounce off that counter trend line. A general rule of the thumb when it comes to trading is, guys, don't zoom out too much in your charts. The markets don't have a large memory span, and this is a general tip as far as trading goes. Okay, it's got nothing to do with the 3 SMA system. It's actually a general tip as far as trading, no matter whatever whatever trading system you decide to follow. The markets have a short memory span, so you don't really want to zoom out that far back in time. All right, the market has probably forgotten about these levels already. Trust me, that's my experience. You want to focus on recent swing lows as far as drawing your trend lines and counter trend lines. Okay, so I'm afraid I don't have any counter trend line to use in my advantage here. All right, now what about will I ever say it? Fibonacci retracements. Fibonacci retracements. Well, this is the high point for the former swing. All right. And even though it's not a really harmonic price action, in fact, this pattern looks more as a breakout pattern. Do you see the staircase formation? Move down, sideways price action. Move down, sideways price action. Move down. Well, this looks like a staircase formation, but at any rate, I'm going to continue with drawing my Fibonacci's here. This is the high for the previous swing. This is the low. Assuming this is indeed the low, should we get a retracement, that would be the low. Indeed, should price keep on pushing down, well, I will just have to readjust my my Fibonacci's. That's my my Fibonacci retracement, and this is the area between the 61 and the 38. If I more or less project the moving averages, okay, they should, by the time we get a retracement, fall in line within that, this Fibonacci area, so to speak. So that's okay. I can indeed use these Fibonacci's and that trend line. As you can see, they come together at the same area, okay? The trend line is also within the Fibonacci area, all right? And, we have the previous swing low there. I'm gonna mark it also maybe in red or pink, it doesn't matter really. I'm not gonna be able to use this level. As you can see, we are looking to find our confluence around that area, and this level down here doesn't quite belong there. Okay, as you can see, it's way below this this level. The only possibility for us to take this swing low and therefore this this horizontal level into consideration is if price continues to push down, we will need to stretch our Fibonacci's, and then let's imagine price follows this type of pattern. Okay, so by the time price is in here, retraces up there, we do have the Fibonacci area, the Fibonacci band, the previous swing low, and if we project the trend line and the moving averages, okay, then yes, around this area we do have a confluence, but that's assuming price first of all pushes down somewhere in here, and then from there it begins to retrace up. As it stands right now, being this level the very low point of this current swing, I cannot, at least at this moment, take this swing low and therefore this horizontal line into the equation, in order to form a confluence. So for the time being, I'm not going to be able to take this one into consideration. So we have the Fibonacci's and the trend line and the dynamic area of support and resistance around this area. So should price come, retrace or pull back from this level, this more or less would be the ideal area. Okay, as the moving averages catch up with price, this would be the ideal area to search for potential bounces to the downside, and therefore to search for our short opportunities somewhere in there. Okay, now we are now looking into the New Zealand dollar against the Canadian dollar on the 5 minutes time frame. Now I'm using this, I want to show you this time frame just to prove that this system can be used no matter the time frame. You can find valid trends, okay? Take a look at the trend filter there, take a look at the moving averages formation. We can find valid trends no matter the time frame. The only difference is that in this swing down, we are going to make, I don't know, let's say just 10 pips, whereas if we search for trading 10, 20 pips, something like that, okay? However, if we would find this trend on the 4 hours time frame, we would make 80 or 90 or 100 pips out of that move, okay? At any rate, the trading principles, the market principles are equally the same, and therefore we can trade them in exactly the same fashion, okay? Alright, so let's assume we are indeed very short-term traders, we are almost scalpers, and we are to search for trading opportunities on the 5 minutes time frame. Alright, so again, what type of confluence do we have on this downtrend? Meaning, what's the ideal areas to search for trading opportunities? Well, let's draw some trend lines. That's the beginning of the trend. I can draw a trend line somewhere in there. Even though it's been broken, okay, there, so I need to readjust it. Okay, that's our trend line. I don't like the pink color, so just give me a second. Let's mark it in blue. All right, that's our trend line in there. What about counter trend line? No counter trend line I can really use. If I link any of these swing lows, we can see that price is, oops, sorry about that, price is still above, you see, above this trend line, and therefore I'm not going to be able to use it as a bounce point. Okay, remember that in order to have a bounce, this trend line, this counter trend line should fall above current market price. Okay, so we can actually get a bounce. Let me zoom out a little bit. Well, this was a valid former counter trend line, okay, but that's obviously gone. All right, that's way too current market price is somewhere in there, so we cannot use this counter trend line anymore, and that's very really, I'm afraid I'm not going to be able to find any counter trend line or to form any confluence out of any counter trend line in this specific setup. Okay, let's now draw some Fibonacci retracements. This is the previous swing. Now this is the latest swing, so we are to mark this latest swing down here from the swing high to the swing low. Let's do just that. 38 and 61. So this is the Fibonacci area. Yeah, sure, I mean the moving averages are more or less in line there. The trend line is right now, as price retraces down, if price it is indeed to retrace down, well, we do also have the Fibonacci area around there. And what about the swing low? Well, that's the swing low there. Okay. Alright, so we have the previous swing low, or the extension of the swing low, also within the Fibonacci area, very near the 38, but still within that area, so that's okay. If we prolong the trend line, they come together around that point. More or less, if we prolong or we extend the dynamic area of support and resistance, it also comes around that area. So somewhere in this area here, okay, somewhere in that area, that's a fantastic level to well, to see potential bounces. Let's imagine price retraces up from this you know, current market price right now 0.7239. So if from this point price retraces up and I see a bounce of that area, that's a rather optimal area to get a bounce, and therefore to search for my short opportunities, because we have multiple levels. Okay, the dynamic area, we have a trend line somewhere in there as well. We have the previous swing low. All that happens within Fibonacci territory, and again, obviously the moving averages themselves. So again, within this area here, okay, we have multiple elements of support and resistance coming together, so any bounce point of that area is going to be an ideal location to click on our sell button. Again, should we get a bounce, if price upon retracing simply breaches above, well, you know what to do. You simply take no trade. But if we do get a bounce, again, fantastic area to click on our sell buttons. Okay? Anyway, I'm afraid this video is already running too long, so it's time to wrap it up. And well, at any rate, I believe I've covered well, pretty much everything I had to say as far as combining these individual elements of support and resistance in order to form confluences. Okay, confluences around the dynamic area. Those are the best possible bounce points you can search for in order to trigger trades of those bounces. Okay, again, as long as you have one or two of these elements within the dynamic or around the dynamic area of support and resistance, those are ideal locations to search for bounces. And indeed, if you get the bounce, be all over that chart, guys. Be all over that trading setup, because chances are you are gonna see a nice move in the direction of the moving averages in the very upcoming future. Okay, and hopefully you will be able to profit from that upcoming swing. All right, folks, that's all for this video. Cheers, bye bye.